Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
Let's get, though, to the trade. As we said, we are well off our worst levels of the session. In fact, we're pretty much near our highs of the session. The back and forth about the imposition of tariffs against the United States' three main trading partners, and then dialing back against Mexico, at least for 1 month. There's a lot going on. So let's get to it with Gina Martin-Adams. She is Bloomberg Intelligence Chief U.S. Equity Strategist, back with us in studio. We talked with you about it last week, kind of, expectations around this. It's a lot of back and forth. How do you figure out what this means longer term, or can we not yet until we get more details on how long these tariffs might stay around?
I think there's one key thing that we know, and that is we should expect more volatility. That's the only thing that we know with 100% certainty is that
check.
We are in for a much more volatile year as a reflection of a lot of different things that started at the beginning of this year, but certainly tariff policy, trade policy at large, fiscal policy, and a lot of movement in fiscal policy decision making is going to contribute some degree of volatility to the index. Now, how do you invest around the likelihood or unlikelihood of tariffs and the kind of back and forth in tariffs? Our work would suggest you just stay out of it by hugging the sectors that are working best and the sectors that are less exposed to tariffs. So that are things like financials. Financials aren't going to pay tariffs, right? They aren't transmitting goods back and forth across borders. Even if they do service the Canadian economy or the Canadian banks service the U.S. economy, they're not going to get wrapped up in the immediate effects or the first round effects of tariffs. And financials have a very strong backing in our sector rotation model. Healthcare is another area that's largely domestically focused. We'll see if tariffs are implemented on the European Union, which could end up sort of picking away at healthcare performance as well. But that's another area where you have limited risk of tariff activity. Real estate is another. So you can avoid a lot of the risk inside equity investing as well until the dust settles and you get a much clearer picture as to what the economic implications of this are. But you're just going to experience a lot of back and forth volatility for the stocks that are most exposed as we grapple with are we, aren't we, will they, won't they? And that's not going to end anytime soon.
Given what we saw during the first Trump administration, how do we think U.S. companies and companies around the world will absorb these tariffs?
So I think that most of what's going to happen, it's key to remind folks that while tariffs are targeted at economies, companies pay the tariffs. And in particular, U.S. companies that are incredibly globalized, very multinational, and lean on manufacturing facilities, distribution facilities to source a lot of their product from the rest of the world will be the primary targets of tariffs. Let's not forget that ultimately part of the tariff policy is intentionally designed to get U.S. companies to relocate, reshore facilities. And so this is the pressure that they're going to feel. How much pressure it takes is still up for debate, but the U.S. companies will pay it. We saw this in 2018, where there was an equivalent operating margin decline for U.S. companies exposed as well as to global companies exposed to the U.S. economy. So ultimately, it's the companies that operate and sell to the U.S. that will have to pay the tariff costs, and the companies across the spectrum are importers of product that will get wrapped up in tariffs.
It also makes you wonder about these global companies, non-U.S. companies that have invested in the U.S. or nearshoring, be it Canada or Mexico, so that they have closer access to the U.S. market. Ultimately, you wonder how they react and whether or not that starts to go away. I mean, that's another factor of all of this.
And will they ultimately then reshore into the United States, or will they just pull back and look for other trading partners and other revenue destinations around the world is a big question. Because how much can they really afford to relocate a plant inside the United States? Presumably, if that were, if they were able to do so, they would have done so in the reshoring efforts post-COVID when interest rates were at zero. We were certainly struggling economically. There was a big incentive to reinvest inside the United States. They didn't. They invested in either Canada or Mexico in these specific instances. There was probably a reason for that. And they'll have to go back and examine those reasons if these tariff wars continue.
Can I ask you, small caps, mid caps.
Yeah.
Is this supposed to be like a good thing then for them if we're worried about those with, exposure to having to import stuff and their costs?
Well, if you look at the month of January, mid caps actually outperformed both small caps and mid caps, small caps and large caps. And I think the vast majority of that was because of financials outperforming. There's a lot of financials exposure in the mid cap index. Some of those were fallen angels from the S&P and the crisis that we had in large caps. But nonetheless, I do think that mid caps have shown to be an interesting area of opportunity so far this year. I would be remiss, though, to suggest that small caps and mid caps are going to avoid this pressure as well. They also import products. They also are somewhat more globalized than they have been, 20, 30 years ago, without a doubt. They're big public entities. They will probably have less risk than large caps on a relative basis, but there will be some cost component that they'll feel as well.
Has your view shifted on global equities at all throughout the last few days?
No, not necessarily. I think that there is still a lot of opportunity in global equities from a relative valuation perspective. Expectations are very, very low globally, as opposed to in the U.S., where expectations, at least prior to the DeepSeek announcement and the tariff announcements, were very high. So you have a relative opportunity in sentiment that's reflected in valuations. We're just looking for that catalyst for growth to emerge globally, and we have not yet seen that in many economies around the world. So you've got to see some sort of earnings catalyst or fundamental catalyst emerge.
Do potential tariffs on European economies threaten a catalyst?
They could. I think that Europe has been preparing for potential tariffs for months. So we may actually ultimately see some relief on the idea that we know what those tariffs are. And they ultimately could be impactful, certainly to the automotive sector, to the healthcare segment. Across the board, any goods producers in Europe are potentially at risk, but we don't have a lot of visibility as to what the president wants to do with respect to Europe. So that uncertainty is still outstanding. I think resolution is always a good thing. We've definitely been selling the rumor of tariffs. Maybe we ultimately buy the news if the news is a little bit less than rumored.
One thing I want to ask you, Gina, is based on what we are seeing from U.S. earnings, how much pain can U.S. companies deal with before we start to see pullbacks in CapEx, pullbacks in buybacks, we start to see job cuts, et cetera, in order to preserve their margins and kind of keep their investors happy? So
far, I think that we're a ways from that. If there's a big risk that I would point to in the near term that could really erode the earnings outlook, it probably is currency. And that lack of growth in global markets and sort of somewhat stagnant U.S. economic conditions. As much as manufacturing did finally poke its head into expansionary territory as of this morning's release, consumer sentiment has only been deteriorating. So you've got a lot of offsets.
Even though
in
consumers
the US
have been
economy.
spending, sentiment's not great.
Yeah, sentiment's pretty bad and is a little bit of a risk. Interest rates are still quite a bit higher than they were several years ago, even with the Fed's easing campaign of 2024. So there's still a lot of uncertainty in the U.S. economy that I think we need to account for. I do think with respect to the U.S. earnings, though, the biggest risk really is tech, media, and telecom, which is 40% of the market cap of the index. That's less a tariff concern and more just, can these companies actually satisfy expectations? How will their CapEx plans change now that we have the knowledge that DeepSeek exists, that there could be efficiency opportunities? Will their CapEx really be as strong as many people had anticipated? Can we start to see some real productivity improvements from AI?
It's like, what is it about the beginning of a year, right? I think about when AI, right? Like 2 years ago when all of a sudden we were focused on it so much, and now like this year, the early part, we're now questioning the original assumptions and moving on. A lot going on. Thank you, as always. Gina Martin-Adams, Chief Equity Strategist at Bloomberg Intelligence.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
We want to get Tim to a little bit more on the impact of Elon Musk and his Doge team.
Yeah, Musk said he's shutting down payments by the U.S. Department of Health and Human Services to a variety of charities, including our next guest and her organization. We've got with us Krish Vignaraja, President and CEO of Global Refuge. With us from Baltimore. Previously, she served in the Obama White House as policy director for First Lady Michelle Obama and at the State Department as senior advisor under Secretary of State Hillary Clinton and Secretary of State John Kerry. Krish, good to have you here. Just give us some background, some context about the work that you do, the payments you have or have not been getting from the U.S. government, too.
Yeah, appreciate your coverage of this issue. So Global Refuge is one of the nation's largest nonprofits dedicated to serving refugees and immigrants rebuilding their lives here in the U.S. We are a faith-based organization. We've been doing this work for 85 years. Our organization was founded by American Lutherans who were helping German Lutherans who had opposed the Nazi regime during World War II. Our mission has expanded since then, but our work today really focuses on resettling refugees from around the world who go through the U.S. Refugee Admissions Program. They go through extreme vetting in order to arrive. In recent times, that's included about 24,000 Afghan allies who serve shoulder to shoulder with American troops and diplomats. We've also worked with Ukrainians who fled Russia's invasion, as well as Christians and others persecuted for the faith.
All right, so give us some background, too, on the funding that you guys have been getting from the U.S. government, specifically, if you could, and how much of your funding comes, or your budget, if you will, or funding comes from the U.S. government.
Yeah, so we've been a strong partner of the government for decades. The vast majority of our funding does come from government, but we don't make any money off of this work. In fact, we have to bring private resources to make the math work because, these programs are intended to be public-private partnerships. And so, the implications of the stop work order and now the failure to receive any reimbursements for the work that we've already done is paralyzing.
Krish, one thing, though, I think it's good for the American public, and we are so grateful that you're here, but to get an understanding of how much money are we talking about, can you give us even a ballpark of what you get from the U.S. government on a regular basis?
Yeah, so I'll just give you kind of an example of a kind of a snapshot of the last month or so. So for work that we did at the end of the year, we have about 20 million that we're waiting for payment from one agency, and about 7 million that we're waiting for payment from another agency.
So that's for 1 month?
It's for a slightly longer period than that at the end of last year.
Okay, so give us an understanding, Krish, about the agreement that you have with the government and sort of if it's a contract, if it's expected, if you have to go and renegotiate every year. How is the money allotted from the government to you, and what sort of guarantee did you think was in place to continue that funding?
Yeah, so when you think about the impact that this is having on social service organizations across the board, it is not limited to the immigration space. So much of the infrastructure of the work that is done is by nonprofits, very much like mine, who do rely on government funding because obviously these are critical services that go to our citizens, to immigrants that we've legally admitted to the country. And so many organizations are impacted. We are not a contractor of the government in the way that you would think of, some of the consulting firms or the private prisons who get billions of dollars from the government. We know that these are partnerships where, days can change and they can, act and say we are going to no longer require services. But right now, what we're talking about is funding for work that is under our grant agreement. It's a cooperative agreement for work that was done. There's no, caveat. There's no concern about whether it was covered. It's just a matter of going through the mechanism of reimbursement. Typically, it'll take a day once we've submitted for reimbursements for us to actually receive the funding. Sometimes, for one of our agencies, for the other agency, it can take about a week. But we have received nothing for the last couple weeks.
And Krish, do you guys get funding from other governments beyond the United States?
No, we don't.
Okay. So without this funding, how problematic is it for your organization?
It's hugely problematic. For us, we are talking about how we haven't been able to help our Afghan allies. These are individuals who had gone through every hoop in order to come because we had made a military promise to them that they were going to risk their lives to protect U.S. troops and that we wouldn't leave them behind to face Taliban retribution. So we've been impacted in the fact that we no longer can serve them, but they can no longer even get off the military base because the stop work order that we're talking about also affects UN agencies. So they're not even able to get off the military base to travel, even if they were able to afford their own flight to come here to the U.S. So it is paralyzing. We operate across the country. We partner with local nonprofits in the reddest of red states and the bluest of blue states. None of them receive funding because we are not able to receive funding.
Krish, there are those that don't understand why the U.S. government is funding perhaps a group like yours and argue for better uses of the money. I'm playing, just the other side of this, or for not spending any money on a group like yours and better to maybe cut back on spending when we talk so much about the debt that the government has overall, no matter how small the spending might be against the backdrop of the larger budget deficit. I mean, what do you say to that? That, the government needs to look at all spending on board when there are perhaps, others might argue, there are people who are living below the poverty line, in the United States. So I'm just saying, how do you address something like that?
Yeah, look, these are the debates we can absolutely have. I just want it to be a fair fight, that it's a fight based on fact rather than fiction. It's been really disconcerting when you hear accusations that we are money laundering or that we are trafficking in children. Our work is centered in protecting children. We know that is a bipartisan value here in the U.S. And so I think I'd first say let's absolutely look to make sure that every dollar is being well spent. But I also believe that we are a nation strong enough that we can that we can walk and chew gum. I would argue that our work with refugees is not just the smart thing to do, the right thing to do, it's the smart thing to do. There are national security interests, there are economic interests, there are freedom of religion interests. There's a reason why most organizations are faith-based that do this work. So I think there are a number of reasons for why we do this. But I also think it's important to think about how we have 8.1 million jobs that are unfilled. We have the lowest birth rate since the census has been tracking this issue. Our country needs to have a net immigration of over 1 million immigrants so that we don't see the stagnation that we see in Japan, to keep our competitive edge over countries like China that are also facing the demographic cliff. And so I think we will win this debate if we have it, but I just want to make sure that we are having it on the right terms.
And just real quickly, just 20 seconds here. I mean, Elon Musk wrote on X, without providing any evidence, that the Doge team discovered, among other things, that payment approval officers at Treasury were instructed always to approve payments, even to known fraudulent or terrorist groups. I'm just asking, just to be clear, have you had any dealings with a terrorist group?
Absolutely not.
All right. I really appreciate your time. So appreciate it. Krish O'Mara Vignaraja, she is president and CEO of Global Refuge, joining us from Baltimore. Krish, thank you.
This is the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, let's get to our final guest this hour, and it has to do just the backdrop of presidents signing executive orders, Republican or Democrat. We've seen it with President Trump. We've seen it with President Biden. We've seen it with both the Republican and Democratic executive, or heads of the executive branch, I should say. We've seen in the Trump administration, we've been talking a lot about Elon and his Doge team in terms of cutting government spending, government workers being put on leave. There's a lot going on right now, which begs the question, what are the allowed powers and actions of the executive branch of the President of the United States, really? And when is a president overreaching and perhaps not abiding by the U.S. Constitution? We've got the perfect person to put that question to. Back with us is Brown University professor of political science, Wendy Schiller. Wendy, good to have you here with us. So what are the allowed powers of the executive branch? Is it very clear?
Hi, Kara. Well, they have been ever expanding, even since Franklin Delano Roosevelt in the 1930s The president has, the Constitution has general welfare clause. It has commander in chief. The president and the executive branch have the power to implement congressional law and also protect the safety and security of the United States. So to provide for the general welfare of the people is a very broad definition. So when you think about overstepping, the question is, are you doing this for personal reasons, for corruption, for payback? That's an abuse of power. But if you are reorganizing the executive branch, if you are saying that you want to streamline or that you want to implement things more efficiently, that is within the power of the president of the United States.
So given what we know about what Elon Musk has done at Doge and what the president has tasked him with doing, do you think we will see pushback from judges here in the United States that essentially renders some of those decisions moot?
I don't think you're going to see federal judges get involved in bureaucratic reorganization.
Okay.
USAID being run by state rather than the people who are running it. If you are protected by the Pendleton Act, which is our original Civil Service Act of 1883, if you are protected as a civil servant and you are fired without cause, you can go to court and sue for your job or damages. That is something within your purview. Where I think the courts have already intervened is when you refuse to send money out the door from the Treasury or anywhere else that Congress has said must go out the door. So if Congress says we're passing a law, we're implementing it, we're appropriating, we have said this money should go out, and the president effectively impounds it and doesn't spend it the way that Congress intends, that is a constitutionally, that's a challenge, right? You have a standing in court to challenge that. We've already seen one judge say, all right, I'm putting an injunction on that. So there are different ways in which the president can, execute power using executive authority. But when you stop what Congress tells you you must do, then I think you run afoul of separation of powers and you run into federal court.
Wendy, can the president, though, be it Donald Trump or some other president, though, reopen kind of government spending with a new budget or new spending program and say, okay, we're going to, let's reevaluate what we've already said and then let's roll it into a new spending plan and maybe we'll cut back on the old stuff and do that? I mean, can he do that?
So he can take, to the president, he or she, but right now it's he, The president can take money that's allocated for a general purpose, so national security or the defense authorization bill, and say, I'm going to build a wall with money that the Army Corps of Engineers was supposed to get. He can do that because it's all generated for a particular purpose. So you can argue congressional intent is to provide for the security of the United States. I can move that money around. Can he take money from Social Security Trust Fund? Can he take money designated for Medicare or school lunches and spend it on a border wall? That's much trickier, and I think that would be subject to challenge. So within the same functional area or the same department, the president and the secretary, the cabinet secretary do have authority to move money around, but to cancel programs authorized by the Congress, created by the Congress, without Congress's permission, I think that's a bridge too far.
Professor Schiller, just in the last couple of hours, we did hear from the president in the Oval Office. He met with reporters. He signed an executive action where he said he would direct officials to create a sovereign wealth fund for the U.S. We have national debt. We have a deficit. We run a deficit here in the U.S. Can a sovereign wealth fund just be created?
Well, this is the big question mark. I mean, is this tax dollars or is this sort of something modeled on the private-public partnership that is the Federal Reserve? We just don't quite know yet, but Congress originates all revenues, all taxes, and originates all outlays. So any federal money has to be approved by Congress to move into a completely different function. But if the Treasury Department has investment funds that it already gives to corporations or public entities or anybody else, and they want to consolidate that into a sort of one singular investment fund, if that's already there in the Treasury, then he might make the argument that I'm just moving things around within the same cabinet department. So he's throwing a lot of things at the wall, President Trump, and he's waiting to see what sticks. We just saw that the tariffs are not even sticking on Mexico. You have to imagine there'll be a negotiation with Canada. But these are leverage, and this is what he's trying to do to see how far he can go, not only with executive power, but in terms of carrying out the things that he said he would do when he ran for president. So
I feel like we're all taking a civics course and a history course, courtesy of Professor Schiller, which we are very grateful in real time. But I do have a question then. So with all that we've talked about, is President Trump overreaching, or is he doing what presidents are allowed to do?
So when you say overreaching, I don't think at the moment he is actually overreaching, given the vast power of the presidency that has shifted certainly since 9/11, and it's been both Democrat and Republicans taking advantage of that. But when you give a private citizen who has not been elected, and that's Elon Musk, or confirmed by a legitimately elected body to have access to a lot of individual personal information, that seems to be stretching the boundary to a point where I'm not sure the American people would be comfortable with that.
So you mentioned the expansion of the presidential powers after 9/11. In your view, which president has expanded the powers since then the most?
I'll say I think it's a sort of competition between George W. Bush and Trump in terms of expanding certainly commander-in-chief and international sort of military and economic power. But, Barack Obama through Congress, although, working through reconciliation, which is a congressional tool, created a brand new healthcare program that serves more than 20 million people now. That is a very significant expansion of the federal government. And DACA 1, DACA 2, the Consumer Financial Protection Board, Bureau, these are things that Obama did as well. And certainly Biden has done things, but more of Biden's work has been with Congress to sort of expand the scope of federal investment in private industry, et cetera. That's been more congressional partnership with the presidency. But this is not a partisan tendency. This is a presidential tendency, and all the candidates, all the parties, all the presidents engage in it.
All right, great stuff. Wendy, thank you so much. Professor Wendy Schiller, Brown University Professor of Political Science, joining us on this Monday from Rhode Island.
You're listening to Bloomberg Businessweek with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, now is the right time to buy high-quality commercial real estate names like CBRE Group, D.R. Horton, as President Trump's tariff play sparks widespread market weakness. So says KBW.
Oh, I thought you were giving investment advice.
Not mine. Okay. Nope, we don't do that here.
Okay, just making sure.
This was actually today from KBW, singling out companies including Ladder Capital, Starwood Property Trust, also D.R. Horton, and as I mentioned, CBRE Group. So some of those well-known names in the real estate space. Also, Jones Lang LaSalle. We've got a member of Jones Lang LaSalle with us. Let's get to our guest. Kevin Davis is CEO of America's Hotels and Hospitality at JLL, Jones Lang LaSalle. It is a $13 billion market cap, publicly held real estate and investment management services company. Kevin, right here in our studio. Welcome. How are you?
Thank you. I'm great. Great to be here.
Tell us about, first of all, we are obviously tariff focused. The imposition of such against the U.S.'s three main trading partners: Canada, Mexico, and China. Although Mexico is on hold at least for a month. What's your exposure specifically, and what impact could these kinds of tariffs have on you?
Well, at this point, it's hard to discern exactly where things will end up. But to the extent that we do have meaningful tariffs with some of our trading partners, the expectation is you could see Americans traveling to foreign countries, a lot of outbound travel, because with the strong dollar, it will be cheaper for them to travel abroad. As it relates to the hospitality industry domestically, it will increase the cost of goods that are being imported. One of the challenges that we face, particularly in the post-COVID environment, it generally costs 30 to 50% more to build new hotels and renovate hotels today as compared to pre-COVID. So there's
that's even before the tariffs.
That's before the tariffs, correct. Yeah. So one of the things that we've highlighted in our recent report is that we expect new supply of hotels to be down pretty dramatically. So to the extent that you have tariffs and it increases the cost to build or renovate, it will, again, limit new supply of hotels, which means that if you're an existing owner of hotels, you can be well positioned to take advantage of the future because you'll have fewer competitors going forward. The other thing I would say is, obviously, to the extent
also makes it higher for folks because the supply and demand.
That's what I would say. Yes, the cost will go up, and certainly to the extent it costs more to build and renovate, those costs could be passed on to the consumer.
What about other policies from this White House, specifically when it comes to mass deportations? We've talked about construction labor being a concern given the wildfires out in Southern California. You talk about the cost of building going up. Right. What does it do if there are mass deportations, indeed, here in the U.S., to the cost of building in your sector?
Well, it's certainly an issue that the industry is keeping an eye on. I would say that things continue to evolve and develop. So it's hard to say at this point what the implications will be, but it's certainly labor has been a major issue for our industry, particularly post-COVID. And it is something that we're incredibly focused on.
Would you be someone who would be a supporter of, if you could, I don't know, maybe you have already, you and your team reached out to the White House, but some kind of immigration law, legal immigration law that allows for workers, be it within the hospitality space specifically, like we have for tech workers that come in on various visas?
We have an incredibly articulate trade group that we work with that will generally express the wishes and desires of the industry. So we typically will work through our trade group in order to
So are they
express
pushing
opinions.
for something like that?
I don't know specifically what they're doing right now, but
Okay.
But again, we work with our trade group there.
Do you find that that labor remains a challenge in all parts of hospitality right now, or where is it not a challenge?
Yeah, it's certainly gotten significantly better. I mean, you look back 21, 22, we had severe challenges with labor. The labor situation has improved, but in some markets it continues to be challenging.
You're talking
So
some markets.
It's going to be market specific.
Market specific geographically, or market specific in the sector of hospitality we're talking about?
More geographically.
So where is it an issue?
I would say a lot of the urban areas we continue to have challenges, but also there's some smaller Sunbelt markets that have challenges. I mean, it's an issue. Again, it's been an ongoing issue since COVID. It's gotten better, but again, it's another issue that we continue to keep an eye out.
Hey, Kevin, got just about a minute or so left here, and we apologize with all the news going on. We got squeezed a little bit. But having said that, what kind of demand is there in the hospitality space? What kind of properties? Is it higher end properties? Is it middle? Like, give us an idea.
Yeah, so it's interesting. We continue to see demand increase, which is great. And it's increasing in luxury hotels. And we've also seen, I'd say, luxury in middle tier hotels. Demand
So how much a night?
Has increased. It's really going to depend on the market. I would say that generally mid-scale and economy hotels, which appeal to sort of down the middle class and some lower income consumers, those sectors have fallen off, particularly with higher interest rates. That's affected some of our lower income consumers disproportionately. So as a result, some of the hotels that they would classes that they would typically frequent have had some challenges with demand.
So it's higher end. That's where you're seeing the demand.
Higher end
or luxury properties. If you will.
Luxury continues what we call upscale, upper upscale, and luxury, which generally tends to be higher end, continues to be on the positive.
Let's stay in touch. Thank you so much.
Thank you so much. Appreciate it.
Kevin Davis, Chief Executive Officer of America's Hotels and Hospitality at JLL, Jones Lang LaSalle here in studio.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Well, we've talked a lot about the big numbers when it comes to the tariffs that Trump has announced. The big picture: tariffs on Canada, Mexico, and China will affect trade worth about $1.3 trillion. But to get an idea of how it affects states, it's important for us to drill down to get an understanding of it on a different scale. For example, according to the USTR, Louisiana's largest export market in 2023 was China, accounting for 14% of the total goods exported from the state of Louisiana. The next biggest, Mexico. And Canada also features prominently in the state's economy. The USTR saying that Canada, Carol, is a, quote, major source of foreign investment in the state.
Right. When we start to break it down, you get really an understanding of how it impacts, the government overall, but really how it impacts states and certainly cities.
So let's get an idea of how the state's economic chief is looking at things. Susan B. Bourgeois is Economic Development Secretary for the state of Louisiana. She joins us from New Orleans. Secretary, good to have you with us. We originally booked you to talk about the economic impact of the Super Bowl. We are going to do that. We're going to get there. But first, how are you looking at a potential trade war with our biggest trading partners?
Well, good afternoon, Carol and Tim, and thanks for having me. And I do hope we have time to get to the Super Bowl and the opportunity that means for Louisiana. But clearly, with what's happening in the world, it's the kind of thing we pay attention to, as do you and a lot of other people. But I feel like first and foremost, it's really too early to speculate on where any of this lands, today being a great example of how this is sort of changing moment by moment. And so to speculate on exactly where the outcome of all this lies, I think we would all be prejudging a situation. But I will say, Louisiana has a pretty remarkable position in federal leadership right now, between our Speaker of the House and the Majority Leader, both being from Louisiana. Our governor's relationship with the president, we're in constant contact with our federal partners, and make it continually really clear to watch this process evolve and what it would ultimately mean for Louisiana. But I will say, in the larger picture conversation, in the larger picture of the whole tariff conversation, I'm confident that any solution that is good for America and good for American businesses ultimately is good for Louisiana and Louisiana's economy. American manufacturing, bolstering American manufacturing is good for Louisiana's economy. Those kinds of things are what we're good at. And I will say, we've had lots of interest, even, phone calls coming across my desk just in the last few weeks of some foreign partners who we have historically done some work with, who are now interested in bringing some manufacturing to Louisiana so they can do that work here. So I think there's opportunity for this to settle out in a way that it is, in fact, not harmful to Louisiana's economy, but ultimately a good solution for America and good solution for Louisiana.
Do you think those calls from those foreign businesses that you mentioned are a direct result of the tariffs or threatened tariffs from the Trump administration? Do you think they would have happened?
Sure. I think the tariff conversation obviously has taken place before the election itself. The governor and I were in Korea a few months ago. In fact, it was the week before the election, and there was lots of conversation about it then. What do you think will happen, and what's some positioning? I think we would be naive to think that countries haven't been paying attention to this and perhaps positioning for it. So in the event it were to happen, I don't think my phone has blown up in the last 2 weeks purely because of it. But I do think this has been a conversation that's been around for a few months now. And again, I think there are people paying attention to it. I don't think anybody's making a move one way or another based on something that at this point is still very speculative.
It does sound like, to you, though, it does seem like this could be you view this as a net positive.
I believe it can be a net positive. Absolutely. I think, again, at the end of the day, I think if we are repositioning the American economy to have a reinvigoration, if you will, of American manufacturing, Louisiana has been incredibly good in the manufacturing space, in the energy space for a very long time. And I think at the end of the day, Louisiana has a real opportunity here.
Hey, one thing I wanted to ask you, Robert Lighthizer, who was Donald Trump's top trade negotiator in the United States during his first term, he has talked about China being an existential threat to the United States. I am just curious how you see China and the relationship of what the U.S. needs to be with China. Is it an existential threat to the United States?
I don't know enough about national. I think it would be foolish to have me comment on national security. But what I will say, in Louisiana, we approach any project that comes across our radar that has a relationship with a Chinese business or any Chinese government interest very carefully, very thoroughly, and the governor gets involved at that level very quickly to determine if it's a project we even want to pursue. I think we would be naive and foolish to do it any other way. So I'm not expert enough to claim existential threat, but I will say it's something we pay very close attention to in Louisiana.
But one thing I will say, and we love talking to governors, to mayors, to really get an understanding of what happens in our states on the ground. And so what is it that you think Americans need to understand when it comes to economic development in the United States, in our cities, and the role that international alliances play in that?
Yeah, I think international alliances and international relationships feed a great deal of economic development nationwide, needless to say. But when you look at a state like Louisiana, and the opportunity and the position that we have, the global position that we have at the mouth of the Mississippi River, the history and the experience in the energy world, the history and experience in the manufacturing world, agriculture, you name it. It is certainly, any international relationship is one for us to pay attention to. But I don't think anyone in Louisiana would say the economic relationship to a specific company or specific country, for that matter, outweighs the importance of national security and what's good for American trade practices, American businesses. I think there's a real logical balance of that. I think Louisiana understand that.
Okay, well, speaking of American businesses, there's perhaps nothing more American than football, at least football, with your hands.
I was going to say, be very careful
football,
when our Brit colleagues are here.
Yeah.
Right.
We can get into a little bit
although
of a battle.
Increasingly, the game of football is going international, as we have seen over the last few years.
True.
But the Super Bowl, it's being played in Louisiana coming this weekend in New Orleans. How are you thinking about the economic impact? Give us some numbers here. Just how big of a deal is it to have the Super Bowl in your home state?
Well, I love that you said that the Super Bowl is being played in Louisiana, because of course it's being played in New Orleans, and we love New Orleans. We love the city. We love everything that it provides. But we are really treating this as Louisiana's Super Bowl, because not only because of the economic impact, but because of the opportunity it has to have the 150 million eyes, right, that watch this game on the state. And so the economic impact is really, it is dramatic, but we view it through a lens that's not just dollars. You know, there's been a real focus under, since I've been Secretary of Economic Development under Governor Landry, to change the narrative about Louisiana. And when you were talking about the kind of national and international attention that is going to be paid to the city, the state, and this game in the next 7 days, we are seizing the opportunity in really creative and bold ways. And so it is an incredible showcase for us to be able to begin to tell that narrative change story.
It's got to feel,
New Orleans is.
Can I just say, it's got to feel amazing, considering I remember being in New Orleans shortly after Katrina, and just the build back and just kind of where you guys are. And I don't know, that moment of, rebuilding for the people who were there, but then also thinking about the way back for New Orleans, the city, but also Louisiana, the state, and how what you guys are doing, and then in hosting the Super Bowl, how it all fits in.
Yeah, absolutely. It's while we've been around the Katrina rebuild for 20 years, right?
Yeah.
Anybody who's from Louisiana has lived it, and in some ways it feels like a lifetime ago because of the change in the city and the state. But truth be told, this is New Orleans' 11th Super Bowl. We're tied with Miami for the most Super Bowls ever held in a city. And we're not, we are not a huge city. We're a strong mid-sized city. And so we are just incredibly well positioned, because I think anyone who's been here, Kara, you said it after Katrina, but the culture, the people, the feel, the just sort of the emotional tie that this city has to people when they experience it, either as a visitor or a resident. And so to watch both, a rebuild and a reinvention, but then also, in the last really 12 months, there has been a very aggressive push to change that whole reinvigoration and reinvention to Louisiana on a more statewide level. So it's been amazing to watch. And obviously I've been privileged to be able to be a small part of it. But, I'm born and raised in New Orleans, spent some time outside of the state, but it's in your blood, and Louisiana's in your blood. And I love that the eyes of the world will be upon us for the next 7 days, so we can showcase that.
Madam Secretary, what can you tell us? We've just got about 45, 50 seconds left here. When it comes to development, the health of states, where's development coming from? You've got, the Meta, massive data center that's coming in. You guys, your energy exposure, there's renewables. Where is money really going to at this point? What is it? What can you tell us and share with us on that front, just quickly?
Yeah, Carol, you just sort of named it for me. I appreciate that. But, at the end of the day, when you have somebody like Meta saying, we're going to build our biggest AI center in the world in your state, in North Louisiana, in a parish that is historically rural, historically agricultural. They're investing in innovation in North Louisiana, to all the energy opportunity that has long existed across Louisiana, and not just the oil and gas industry, which we are proud of and will claim, but also the opportunity to respond to the world's desire for renewables and decarbonization. We're incredibly well positioned to take advantage of those two sectors. And then when you link bioinnovation with our agriculture and the other pieces that we have, we really sort of have a perfect storm, no pun intended, to really turn those legacy issues into a strong future.
Got it. Hey, 5 seconds. Chiefs or Eagles? Make the call.
Nope, not a chance. Louisiana.
I hear you. All right, Susan, thank you so much. Susan Bourgeois, she's Economic Development Secretary of the state of Louisiana, joining us from New Orleans.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, TikTok, everybody. Just about 18 minutes left to go before we wrap up the Monday trading session. And as you just heard from Charlie and Bill Maloney, you've got stocks just rolling over their best levels of the session, still down across the board on your major equity averages, but a very different picture from what we saw at the open this morning. And if I look at the S&P 500, let me just pull it up here on my Bloomberg. You've got 179 names to the upside, more names as you would expect, 324 to the downside. So we definitely see more of a risk-off trade, no doubt about it. Volatility, as we heard from Gina Martin-Adams, it's back.
Hey, volatility, probably a result of what we're seeing play out when it
Yes.
comes to what I think many would call a trade war. I want to see what Patrick Frizzetti has to say about it. He's managing director and partner at Rose Advisors. He joins us here in the Bloomberg Interactive Brokers studio. Patrick, welcome. Good to see you. A different trade than we saw earlier in the session. We're still waiting to hear what the call from with Canada's Prime Minister Justin Trudeau leads to. We saw some reversal in the morning. How do you read into today's action and also the trade war?
Well, thanks for having me. I would say one thing is clear. We're in a new normal when it comes to the financial news cycle, when you have, I think, consistent moves.
Is it a new old normal?
A new old, yeah.
Okay.
A new old, I think that's fair. But when you think about, the one thing that's clear, when it comes to trade, the Trump administration prefers bilateral over multilateral, and they're willing to use economic tools for non-economic goals. And here, obviously, he ran on a platform of immigration, containing immigration policy. And if that's the goal here, is to control immigration and, obviously add on to that narcotics and fentanyl coming into the country, this has been his approach. But I heard someone use this old Chinese idiom earlier today or over the weekend, and it was killing chickens to scare the monkeys. And if the U.S. is willing to put this pressure on their closest and friendliest allies, then what does that mean for the rest of the world? And so when you think about trade war, clearly there's an inflationary element to it, and I think we're going to continue to see it. And no one should really be. I'm not that surprised. Maybe I'm surprised at a 12-hour turnaround, particularly when it comes to Mexico. And maybe we'll see the same thing out of Trudeau. If we don't, people may chalk that up to being political, right? Trump doesn't get along with Trudeau.
I think a lot of people would hear what you're saying and say, I guess it makes sense for 25% tariffs, if indeed it is to control immigration and fentanyl, for that to be on Mexico.
Right.
But those two things, as John Authers pointed out in his column today for Bloomberg Opinion, those two things don't apply to Canada. That's right. When you get less than 50 pounds of fentanyl over the border,
that's right,
each year, whereas over 20,000 coming from our southern border.
And that's why I think that statement applies, is that he's just willing to, use it as an excuse to put pressure on his closest neighbors, as maybe it's a negotiating tool, perhaps. Clearly, it's to fight immigration as it relates to Mexico. But you're exactly right. I mean, when you look at the numbers, it's so different. With, I think you said, under 50 pounds of fentanyl, and it was over 21,000 pounds at the southern border. Same thing with immigration, by the way. Detainees, it was just under 24,000 detained in fiscal year 2024 at the northern border. And that's 1.5%. The rest is on the southern border, over 1.5 million. So it's vastly different. And so to apply these pressures, I think it's more symbolic than anything. And maybe in part because it's political. Let's be honest. Trudeau, sort of in his lame duck days, perhaps the last shot across the bow to some degree, but it's really because Trump wants to put in effect what he said was one of his priorities on his campaign trail, which is immigration.
So, Patrick, how do you then advise people who want to invest in this market or already have money in this market and are trying to figure out, am I in a good place? Maybe I don't maybe it's not even about returns, but it's also about, minimizing any kind of downside at this point. So the VIX popped up a little bit today, certainly not to some levels that we've seen in other moments of turbulence and volatility. So what's your advice to investors in this environment?
Well, if you have a plan of action, have had that plan of action, since last year, then I think you can very much follow a course that you set in place. What I did with clients in the middle of last year.
But if we end up having tariffs that are longer.
So if you have you always have to look at who the beneficiaries of that are. Again, one thing I've been saying is nearshoring, onshoring has been a theme of ours for over a year now. And if you think of a deglobalized world, who are the beneficiaries of that, right? And so if tariffs continue, that can, without a doubt, put recessionary pressure. I mean, that definitely comes into the mix. I think in a place like Canada, you'd probably definitely see recessionary pressure even sooner. That would be an indicator of potentially what's to come. I mean, 80% of
what's to come for the U.S.
What's to come for the U.S. 80% of the economy in the U.S. is service-oriented, right? It's service economy. Okay,
right.
The other 20%, you'd say, okay, it's hard goods, manufacturing, et cetera.
Right.
But that creates an enormous amount of volatility in the economy, that 20%.
Why is that? Is it because if you have less money as a result of paying higher prices for that 20%, you spend less on services? Is that part of the equation?
I think it's part of it, but also, there's a particular investment, I would say, when it comes to manufacturing a good, right? There's an entire supply chain. When it comes to services, it's not quite the same supply chain, right? So you think of capital that you need to spend on it. And it's not, it's not, one for one, but over time, I think you see why the economy is more fragile or more sensitive, rather, to that 20%. We continue, those type of headlines tend to rock the markets, and if you start to see it pour over into the bond market,
right?
The first thing this morning was, the bond market is much more accurate than the stock market. Let's be honest, you guys cover this stuff for a living.
Yeah.
The bond market moved maybe 2 or 3 basis points this morning, and so you say, okay, what's the read through here?
Right. And the sensitivity. So, all right, just got about 30, 40 seconds. So are you telling most of your investors to sit tight? Are your investors calling you and saying, I'm a little nervous here?
Yeah, there's always some concern. I think there was some concern with the new administration. What kind of policy? What impact would this have for me? I mean, we preach having a balanced portfolio. So if you have some fixed income, that makes sense.
Shorter duration?
Yeah, short to intermediate duration.
Yeah.
I think having a balance too. I mean, we've been long precious metals for 3 years now, offsetting some of the equity risk with precious metals, having some commodity exposure, right? It's preparing for those unknown situations, right? And this, like I said, this is the new old normal, you said. I mean, we're going to continue to see that, and that could create.
Do you feel more confident this year about the investment environment than you did last year, or no?
I feel better about it.
You do?
Yeah, because
we're optimistic.
Yeah, I just feel better about it. I feel better about it. I think managing money in this environment is.
We got to run. You're optimistic. Patrick Frizzetti over at Rose Advisors. This is Bloomberg.
This is the Bloomberg Business Week podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.